on the Genius Trading Systems, specifically how you can become a genius trader. So if everyone's ready, I guess we can start. Let me check my time here. My moderator, can you hear me?
Yeah, everything works.
Everything's working. Okay, yeah. Can you see my screen?
Sure.
Can you see me?
Yeah.
All right. Okay, great. Thank you very much. All right, so for those of you that don't know me, my name is Joseph Nemeth. I am the founder of Genius Trading Systems and one of the co-creators of the Genius charts and Genius trading indicators that I will introduce to you. But more importantly, what benefit can you get from this? Well, basically the topic of today's discussion or today's seminar is how you too can become a genius trader. So before we go any further, though, I'm required to read this to you. And here's how it goes. GeniusTradingSystems.com does not provide or offer financial advice. Any and all information contained in this presentation or on the GeniusTradingSystems.com website or obtained from any affiliate of GeniusTradingSystems.com is strictly for educational and informational purposes. Trading in any financial market is risky and therefore not suitable to all investors. Past performance is not a guarantee of future results. All right, so having said that, are you ready to become a genius trader? So the topic of today's discussion is going to be basically what is a genius trader and how to become. We'll go over some fun facts. This is going to be fun about the stock market, its history, and why Dow Jones, NASDAQ, S&P 500, and S&P 500 are the best markets to trade. Sadly, why 98% of traders lose money and fail. We'll talk about the problems with old-style charting, how GTS solves all these problems. We'll talk about and show the characteristics of the GTS charts and indicators, how to set up your GTS charts, and finally, we'll look at some trading strategies for success. All right, so what is a genius trader? Good question, right? A genius trader is someone who makes an average of 1% or more per day trading in a financial market. This is my definition, and I think you will agree that if you can consistently make 1% per day, you can be considered a genius trader, because if you came to Wall Street and you made 1% per day, all the Wall Street experts would give you their eye teeth, their firstborns, and would probably let you date their spouse. Wall Street makes an average of 5 to 10%. So when you say 1% per day, you know, the establishment is going to say, no, that's not possible, too good to be true, can't happen. But you will see that the opposite is the truth. 1% per day is actually not that difficult, and you'll see exactly how we do that. So a genius trader is a trader who makes at least 1% per day, but can make it consistently over a long period of time. And also, he or she is a trader who is patient, focused, has a bulletproof trading strategy, and sticks to their business plan or trading plan. Now, my goal today is going to, and not just today, but also in future seminars and webinars, training sessions that we're going to have for those of you who want to become successful traders using the GTS system. My goal is going to be to help you become a genius trader, help you make at least 1% a day, hopefully more. So why 1% a day? Right? What's the magic of 1% a day? The magic of 1% a day is that, contrary to the popular belief, 1% a day is not that difficult, really, because when you think about trading an initial capital of $10,000, say $10,000, 1% of that is $100. That's not really a lot of money when you think about it. All right. Okay. So 1% a day also equals 5% a week. Now I put up this little chart. This is just pure math. There's no magic to this, but the whole thing together appears magical, because if you can stick with your small goal of 1% a day and do it consistently day after day after day, the first week you'll make $500. The first month, you'll make just a little over $2,000. Now, obviously, don't quit your daytime job yet, but as the Chinese say, 1,000-mile journey begins with the very first step. So if you focus on the small goals and stay patient and be persistent, then you will achieve the long-term goal. 1% a day. So if you can do this consistently for 1 year, 1% a day will give you, starting with $10,000, will give you just over $100,000 a year. And similarly, if you can continue for another year, you'll do that again, and you'll have over $1 million in your account in just two years, starting with just $10,000 a year. Now, to do this, you will need to focus on your daily targets, which will be $100 per day initially, then later $200 per day. Don't focus on the seemingly unattainable $1 million down the road. People who do that ultimately fail because they lose track of their short-term daily and weekly goals. So what we actually do with the Genius Trading Systems, we teach the users of our systems, of our strategies. We teach them how to make 2 to 3% per day, not just 1%. First, you'll as you're getting familiar with the program, with the charts, with the system, with the strategies, you'll be making less. Later, you'll be making more. But so if you can do that at 2%, then you're accelerating your trading account a lot faster, and within a year. So in other words, you're not making $100 a day, you're making $200 a day initially, and that as the geometric progression makes your account grow, then everything stays the same. You just focus on your small daily goal, and then the big results will come. So that's what we do. Now, most people say, when I talk to people, 1% a day, they said that, no, you can't do that. That's impossible. Nobody does that. Well, I beg to differ. I know a lot of people who do that, and I do that myself quite often. In fact, let me show you some results from my personal account, so that I'm not just talking, but the proof is in the pudding, right? So I trade several different accounts, but these are my daily results. Now, this particular day, 7.3%, another day, 8.7%. These are daily profits, 8.7%. Now, notice that this was a down day in the market. The market was down quite a bit. Then 9.1%. Different day. Look at the market here. The market was up. Then another day, 9.1%. The market was down again. So it doesn't really matter if the market's going down or if it's going up, down. It doesn't matter. You still make the money with the system and with our charts. That's all I use. All I do is trade off of the Genius charts. Here's one, 10.6%, 12.7%. Here's one that is not, well, it's still pretty good, 5.4%. But more importantly, look at this, 113%. And this is here year to date from January 1 to January 19th. Right? So from January 1 to January 19th, 19 days, 113% profit. That's not bad, right? That's more than 1% per day, right? Right? From January 1, January 19th, in 19 days. This is 19 calendar days. I think it was maybe only like, or 15 trading days. So basically less than 3 weeks of trading, right? All right. So there should be more. Okay, here we go. 8.7%, and 0.5%, 33%. This was a really good day, right? This is the best day I've ever had. 13.5%. Now 9.8% over here, but also 740% in 3 months. That's not bad, right? And here's one, 4% this particular day, but more importantly, in 100, that's 1,494% in 6 months. Obviously, more than 1% per day. So yeah, having said that, let's look at how we do this, right? How we do this. So let's look at the oldest capital or oldest financial market in the world. This is Dow Jones Industrial Index, and let's look at some facts. Let's see what these markets do. Okay, so what you're looking at is almost 100 years of market history, from all the way back 1929 or so to today, 2023, right? And obviously, as you can tell, this market is just roaring up, right? Has it always gone like that? Yeah, pretty much always. Sometimes there are little corrections, but for the most part, over the last almost 100 years, or let's call it 100 years, the average investor would have made 5% per year. Now, 5% per year might not seem a lot, but that's about the average that Wall Street makes. Sometimes more, sometimes less. Now, obviously, so if you invested back in 1929, where the market was worth about $350, that's 5% over the 94 years, you'd have $34,345, which is what the market is about now. 34,000 or so, right? That's right now. So here's the 5% per year, and this is about what the stock market does. I guess Warren Buffett does 9% per year. But anyway, so if you adjust that for inflation, so you know how much the $350 is, the $350 in today's money adjusted for inflation is about $5,633, which means that you still would have six-tupled your money, and possibly even more, or maybe, yeah, that's just over 600%. Not bad. Mind you, 94 years. Don't know if you have that much time, but definitely something positive comes out of this. And what is the positive? The positive is that 100% of all long-term investors that have a 10+ year outlook when they invest, every one of them, every single one, 100% of them made money. Now, that to me is positive. Everyone makes money. So if everyone makes money, right, let's look at a little more granularly at this, so that we understand this market. And this is another fact. In all this history, 29 to 2023, there have been only four times in history that the market was down 2 years or more in a row. And here's what those four events are. The 1933 economic depression, that was right here. Then we have the Second World War, right here. Then the 73 or the 70s economic crisis, the high inflation and so on, high gas prices. That was 73, 75. And finally, the 2000 dot-com bubble. That was followed by the 9/11 World Trade Center falling down or coming down in 2001. So those were the only times, no other time. In fact, the pandemic, and this was the pandemic 2020, yeah, that was a positive year for the market, even though the market dropped a little bit, but by the end of the year it was up. No big deal, right? So when we know this, right, let's kind of look at a little bit more at the monthly chart here, right? And we're going over here from October 1928, which is right at the beginning, all the way to the end, which is February today, 2023. We're looking at the monthly chart, the exact same thing, right? Same 94 years. But this time we're looking at the monthly chart as opposed to the yearly chart. So I laboriously calculated the number of months. This is exactly 1,121 months on this chart. Now, did you know that out of all this time, this 94 years, virtually 100 years, there have been only 31 times in history of this market that the market was down 3 months or more in a row. Now, 31 times in 94 years or so, that's about that's an average once every 3 years. So that's also a very positive result, or a very positive fact. It's kind of a fun fact. It's good to know, because we know that markets keep going up. And doesn't even matter if they crash. And we have over here we have the three most recent crashes. That was the dot-com bubble that I was just talking about, and the World Trade Center coming down on 9/11, 2001. And then the next one was the banking crisis of 2008. Now, both of those were recovered relatively quickly. I mean, these were big crashes, but they recovered. And finally, we had the COVID pandemic. The COVID pandemic, the market recovered in just 8 months, right? So let's look at the three major markets. This is the Dow Jones last 50 plus years from 70 to 23. 80% of the time the market is up. Over here we have S&P 500 from 70 to 2023, also 50 plus years. 80% of the time the market is up. And then we have NASDAQ. NASDAQ is not as old, obviously. That's the tech market, high tech. Well, we've got about 25 years on that market. Over here, 20 years, but 20 plus years, 80% of the time, the market is up. All of these markets, they're just up and up and up and up, right? So if the market is up, all of these markets are up 80% of the time. Why do 98% of day traders lose money, right? Good question, right? The markets are up. And the reason why these markets are up, because Wall Street makes money when the prices are going up. They don't really make money when the prices are going down. Sure, from time to time, there's a correction, there's a crash, but doesn't last very long. Wall Street cannot afford to lose money. The markets are not going to crash. Some companies within those markets might go out of business and crash, but within the indexes themselves, the indexes will replace those bad companies with new good companies, and the indexes will keep going up. That's why I say that the Dow Jones, S&P 500, and the NASDAQ are by far the best markets to trade, bar none, end of subject, period. I don't care what anybody says. If you're trading crypto or Forex, good luck to you, but I'm gonna stick to these markets because 90% of the time, the markets are going up. So back to my question, why do 98% of day traders lose money? And some of those are you, otherwise you probably wouldn't be here and you know who you are, right? So why do 98% of day traders lose money? All right, well, let's assume you're in Vegas or you're in a casino playing roulette, and pure statistics, let's just say that on this roulette wheel, 80% of the time, the ball lands on a red, the ball lands on a red number. 80% of the time, what are you gonna bet, right? How would you bet? Would you bet on red or would you bet on black? 80% of the time, the ball lands on red. Do you bet red or do you bet black, right? Now, if you know that, how often would you bet, right? As often as you could. Well, the problem is that in the stock market with this particular statistic, because this statistics comes from the annual chart, and you'd be only allowed to bet maybe once a month. That's about it. You couldn't bet as often as you'd like because you're trading on a yearly chart, right? So, but still, you know, with 80% of the time markets going up, why do traders lose money? Well, my logic and my analysis says that, and of course I'm a trader, I used to trade these types of charts. The problem is that most traders just use the old style confusing charts that basically don't give you the right information about where the market is going. So this type of a chart, and since people have no clue where the market is going, even though most of the time is going up, 80% of the time, they use different types of indicators and lines and moving averages and so on to confuse them even more, right? So, I mean, if you're looking at this chart, would you know, can you tell which way the market is going to go from this point forward? I can't. I mean, it could go up, it could go down. Who knows? I mean, anybody's guess. Now, what I do know is that eventually, at one time in the future, it will be going up. And if I stay in the market long enough, I'll make money no matter what happens. I mean, history is telling me that. So how can we use that to our benefit? Okay, I'll play this exercise with you to illustrate to you what really happens, how it works. This has nothing to do with trading, but just play along with me just for fun. So I'm located on the street of a very large city somewhere. Now, can you tell me what city I am in? And I will give you a clue. Here's your clue, right? I'm somewhere in a big city. Here's your clue. Can you tell me what city it is? Well, that clue is about as useless as someone trying to trade using a yearly chart. It gets you absolutely nowhere, and I'll explain to you why. So this clue doesn't do anything any more than a yearly chart does to a day trader. So I'll give you another clue. Okay, here's another clue. Which city am I in? Well, this is a little better clue. At least I know I'm somewhere on the east coast of North America, right? But do you know which city I'm in? Same thing, a useless clue. It's almost like trying to trade off of a monthly chart. Doesn't really tell you much. Okay, another clue here. I am actually on this street. Can you tell which city I'm in? Useless. This is trading on a 5-minute chart. I mean, could be any city, right? So how about this? Can you tell? Some people should be able to tell from one of the buildings, but still no. All right, so this is almost like trading off of a 1-hour chart. Well, how about this and that? So now you know. See, the problem in trading is, and I have identified this long time ago, is that people who use time charts, the time charts are very confusing because every time frame represents a different price development within that traded instrument. So even though we have good intentions, and as I say, the road to an empty trading account is paved with good intentions. We want to use a good chart, but what is a good chart? Because every time frame is different, then we try to add indicators onto a chart and moving averages and RSIs and all this even more confusing things that confuse us even more. So let's go back to that Dow Jones Industrial Average yearly chart, right? In 29 to 2023, and these are the facts, right? I'm not making this up. You can look this up yourself. So Dow Jones Industrial Index 1929. This is a yearly chart, okay, annual chart, and let's pick a year. Okay, here's a year that I picked. Looks innocent enough. This 1 year. So what you see is 94 price candles, right? And every one of these represents 1 year in the price movement of Dow Jones of this particular market. But how do I know? How do I know what time frame to use on a chart? Well, this is a 1 year, and so as I pointed out with my illustration of the city of New York, this doesn't really tell you much as to what happens within the year. So let's pick 1 year, and this year right here, this is 2015, and let's look inside this candle. Let's look inside and see what happens within that candle, right? Within that year, right? So every year, right? Every year has 250 trading days. And this is the daily chart of Dow Jones Industrial Index for the year of 2015, from 2015 to 2016. Now, this is each and every day within that one bar on the yearly chart. Look at this. About half of them are red and half of them are green or so. Would you know any given day which direction the market is going to go? Well, but really that's just the beginning, because if we pick a day, and let's pick one, this one looks innocent enough, right? this day right here, October 13th. October 13th, let's see what happens inside that one candle, that one little candle, which is a daily candle. See, each trading day, each and every trading day has 390 trading minutes. So what we see here are the minute candles within that one day of October 13th. Now, would you be able to trade off of this? What about this? This is the daily chart and the minute chart, or anything in between. So what is the right chart to use, right? And same thing, let's look at NASDAQ. And this is NASDAQ daily chart as of Friday, 33rd. It would appear that this market, a layperson would say the market's going down, right? Well, that's the daily chart. What if we look at 60-minute chart? It would appear here that the market's going up. And this is the same instrument, this very same day. The only difference is the time frame of the chart. You see how confusing this is? Have you ever thought about this? Have you realized what's going on? So, and then if I look at the 15-minute chart, the same day, the very same instrument, same day, look, which direction is this going? Doesn't seem to be, it seems to be kind of channeling, kind of going sideways, not going really up or down, or at least that's the way I would interpret it, right? So to correct this problem or to solve this problem, what people do, they look at different types of charts at the same time. You've seen these experts, you've seen them on TV and CNBC and whatever financial shows, they show these traders and they have 5, 6, 12 different screens, and on every screen there's a different chart, and they're looking and trying to with their mind organize these graphs together, and that's actually not a bad idea, a good idea, but difficult in reality to accomplish, because every chart, the price is going in a different direction, yet it is the same instrument, same time, same day, same minute, right? So, and this is why 98% of the people that day trade or even trade fail. Now, I identified this problem long time ago. In fact, I developed a few strategies way back when. Those of you that have followed me, have probably seen my lectures on YouTube. I used to do these many years ago, 10, 15 years ago, and I identified the problem, and I created, I have almost 2 million views of my different trading strategies on YouTube by now. But it's been a while. I haven't done any recently because I have come up with something much better. So, and the beginning of strategy started with me trying to synchronize three different time charts. I would pick a long-term chart. I would call it my master chart, and I would only trade in that direction. Then I would have an intermediate chart, which is a confirmation of that master trend. And then I'd have a short-term trigger chart. And when all those three would synchronize together, when they would match in the direction, when in a specific moment the market was going in the same direction on all charts, that's when I would go into a trade, right? And basically this was a very successful strategy, and in fact it was written up. There's people still talking about it on all over the internet. In fact, people have made their own variations of it, and so I've received 1,000 questions at least on it. And with the tools that we had at the time, this was the best that I could put together. But there were still serious limitations. And what the limitations are basically have to do with time, because if you look at, for example, this chart over here. So this long-term chart is a 4-hour chart. This intermediate chart is a 1-hour chart, and this short-term chart is a 15-minute chart. What the limitations and the flaws of this particular sheet is that each one of these bars measures exactly same amount of time. Not necessarily the same amount of price movement, but the same amount of time. And in one section of time, the market doesn't have to move at all, whereas in some other sections of the same amount of time, the market just rips. right? And so when your strategies are based on the closing price on any given time frame, you can lose a lot of price movement. In fact, that's usually what happens, because the market doesn't wait for the candle to end to give you a signal. It just happens any time. So what I wanted to do is create a better system that would be easier to follow. And what eventually this led into was the development of the Genius Trading Systems. It is called systems and not a system because there are several different systems, as you will see in just a little bit. So, what is the Genius Trading Systems? What are the different systems? Well, it is a series of indicators and charts, right? Proprietary indicators, including step-by-step trading strategies that are designed to accurately, not predict, but identify the trend in a financial market. So it's not like we try to predict which direction the market is going to go. We simply identify the trend in which the market is. Now, it doesn't mean that this market is going to stay in this trend tomorrow or even in the next 5 minutes. But we know, we've identified that the market is currently trending in this direction. And we know from history that if market has a trending, it has a tendency to remain in that trend for some period of time, be it on a short term or long term. This rules applies, and it's true on pretty much any time frame that you look at. All right. So how do we solve the problem with the old charts? How do we make any non-professional trader a genius trader? Well, this is our GTS trend chart, Genius Trading Systems trend chart. As you can tell, there's really no indicators here. There are no lines. There's just bars that identify the price movement or show the price movement. And then there's colors in the background colors. The green color in this particular case means the market's going up. The red color is the market's going down. You even get an arrow that says, okay, that tells you the market, we've identified the market changing direction. The master trend is changing directions. If it's changing direction to the upside, you'll get a green up arrow. If it's changing direction to the downside, you'll get a red down arrow. Simple as that, right? What can be simpler than this? Could you follow the colors and see where the market is going? But this is not just the only thing. But what's going over here? Okay, basically what we have done is my IT team and my co-creators, we've taken the best indicators used by Wall Street, and in the background, kind of behind the curtain, with our algorithms, we convert them into easy to read this type of visual, so that you can much easier identify the direction of the market, right? But we take it a step further, right? Because my original strategy was based on several time frames, right? And just meshing those time frames together, synchronizing them, and finding the right moment to get into a trade. Well, we kind of do the same thing, but we don't do it with time. We do it with price, because being able to trade on price action is a lot more accurate and a lot more effective than trading on time, right? So here we are. This is what we call our 3-in-1 chart. And then we have another one called 5-in-1 trend chart. So what you see over here are three different price frames that are lined up. And when the colors from each trend meet, that is a good signal that the market is going in that direction. Similarly, on the 5-in-1 chart, you've got a total of 5 different price frames, 5 different price charts that are all blended into one screen, into one chart. That's why we call it 5-in-1. And you don't have to be a rocket scientist to see where the color changes from green to red or red to green. Now, this doesn't have to be green or red. You can change these colors. These charts are completely customizable. You can customize them any which way you want. You can mesh these time frames with any price movement that you want, depending on your style of trading, your risk tolerance, etc., etc. And you could have on the price moving up, you could change it to blue, and could be purple going down. I don't know what tickles your fancy. It doesn't really matter. But bottom line is that rather than trying to visually recognize several charts at the same time, we're just lining up the colors. And when the colors line up, we go in. When they misalign, we take our profit, get out, get in and get out on color changes. Can you follow the color change is basically the question. So now there are specific rules that we use in different strategies, and I don't have time to go over those right now, but we have PDF document called the GTS trading rules. And in this particular, there are several strategies, not just one. There's five, six different strategies. I have not published them all, but in time they'll be all published. This particular one works on the 3-in-1 chart. There's exactly 20 rules to follow, and as long as you follow these rules, then basically you should be okay, because these rules and these strategies are time tested over last months, if not couple of years. So don't worry if you don't remember everything I'm going to say in the next little while, how these rules apply or how the steps apply. You can download this document, or we can email it to you, whatever you. So no worries. So go to geniustradingsystems.com, register for your GTS package, whichever one you like, whichever one fits your needs, and then you can have access to all of this information, which is free. So anyway, let's just look at our 3-in-1 chart. I'll go into setting these up in just a little bit, but I wanna basically show you how the trading is taking place and how we trade off of these charts. So over here I have a 3-in-1 chart. On the very top, that's my master trend, and on these two bands on the bottom, these smaller, narrower bands, they are my sub trends. They are not my main trends. My main master trend is always sitting on top of my chart, and I will always trade in the direction of the master trend. So the master trend tells me which way the market is going, and then the sub trends or the minor trends, which is the second band and the third band, they are basically telling me when to get in and out of a trade. So ideally, I'm looking for a pullback, and on the resumption of the trend, I'm opening a trade, jumping in, taking a profit when the trend starts taking a pullback or correction again. So I can do this on either one of these sub trends. So we only trade in the direction of the master trend, never in the opposite direction. You will never have a short trade. You will never be net short when the master trend is green, or whatever color that you have that signifies the trend to the upside, where the price is going up. Never ever. That is like one of the 10 commandments, man. You don't break that rule. You just stick with that. Just like the big market indexes, Dow Jones, S&P, NASDAQ, 80% of the time they're going up. Well, this is kind of the same thing. When the master trend is green, you trade in that direction. When it changes to red, you can now be short whatever instrument it is you're trading. But also take heed from these bottom sub trends, because they give you the exact or the ideal entry and exit points into your profitable trades. Now, you will not always make money, because the markets are unpredictable. They can change on a dime. 1 minute they're going up, next minute they can be going down. Like I said, we do not predict the market into the future. we only find the trend and stay with that trend until that trend lasts. When it changes, we go in the other direction. So once the master trend is established, right, then we wait for a color change or color signal from any one of these subtrends. Simple enough, right? Can you follow that? Here's the master trend, subtrend, another subtrend. Okay, no more all those confusing charts, because everything, all those indicators, all those lines, everything is already evaluated, if you will, and our algorithms are determining what color of on the chart you should be looking at based on all those other confusing things. I mean, we're still using them, but you don't see them. They're in the background, right? All right. So this is where we enter a trend. So enter a trade. So the master trend has been established. And once the master trend has been established, we take a trade, and I illustrated it with these yellow horizontal arrows over, right? So when on the first subtrend, when the color changes from red to green, that means the trend is likely to resume, and we can enter into a long trend in this particular instance. Next opportunity to enter a trade, same situation, just a few hours or a few days later. This is a pretty long-term chart. So we enter here again. Now on the lower price frame, the faster changing trend chart, right? The faster changing subtrend, we enter in a similar fashion. We wait for the green color to match with the green color of our master trend, or vice versa. That's our entry, right? So we enter a new trade at the beginning of a color change on any subtrend. That's it. Simple as that. You don't have to be a rocket scientist to see the color change. That's your signal. Do the colors match? Okay, enter a new trade. All right. So again, we enter trades only in the direction of the master trend and take our signals from the subtrend. Now here I illustrated when we actually take our profit, or when we exit the trade. Now we only exit a trade when it's profitable. We only exit a trade when it's profitable on the color change. When the color of the subtrend changes of the color of the master trend, we take our profit if we have one. If not, we let the trade ride, and we'll wait for the next opportunity. So with these blue arrows, I illustrated if we happen to be in a trade, when to take our profit if we have one. These are the opportunities to take don't leave any profit on the table. If you have a profit, take it. Nobody ever went broke taking a profit. Granted, you might leave some on the table, but it's okay, because if the trend resumes on the subtrend, you can enter back in again. So take profit when any subtrend changes color. If your trade is not in profit, let it ride. Now, if you've closed your trade with a profit, then re-enter a new trade on a new signal from any subtrend if you have no open trades. That's it. If you have open trades, then some of the rules apply, and that's a topic for another discussion when we're actually going over the rules of the specific strategy. But this is to give you an overview of how we trade and how we generate these types of results. Okay, so next on we have two types of charts. We have the 3-in-1, and then we have the 5-in-1. Now, using the 3-in-1, we can effectively manage one trade at a time in the direction of the master trend. Now, the 5-in-1, because it has more of these subtrends and gives you more entry and exit signals, you can easily manage 2 or 3 trades. So the 5-in-1 is designed for someone who is already a little more familiar with this style of trading. Obviously, it's new to most of you. I'm pretty sure all of you. And once you get used to the 3-in-1, then you will grade to the 5-in-1. And obviously, that's where that's where more trades and more profits can be generated, because you can manage more. Okay. So now what happens when we enter a trade and then the market turns against us. I mean, does it happen? Of course it happens. Does it happen a lot? Yeah, it can happen, but that's not a big deal because eventually the market will reverse. Markets don't go in straight lines. They kind of oscillate. They go up and down, right? So no big deal. But one thing we do not do is we do not, if we're in a trade that we got on a good signal on a legitimate master trend direction, and now the market reversed, then we will hedge. And how do we hedge? Well, there's a simple rule to hedging. If you're using the 3-in-1 chart, then when all three colors have changed from the original trend, so in other words, if the original color was green and now you've got all three colors that change to red, you will hedge, which means that you will open an opposite trade. It doesn't matter if you have a trade open to the upside. If you're long, then you open a short trade. It's okay. Keep them open at the same time with options and these. You can easily do it. No big deal. In fact, that's a preferred way of trading that way. So now you'll have two trades hedging each other, kind of blocking each other. At this point, you're not really making any money, but you're not losing any money. Now, if the market continues retracing or making a correction and then resumes the original trend, no big deal. Close the hedge, take the profit on the hedge, and resume trading on the upside. Now, if the market reverses, then your hedge trade becomes your main trade, and your main trade becomes your hedge trade. And you will close them one at a time, depending on what direction of the market you're finding yourself in. Simple as that. So if when you're trading the 3-in-1, then you will hedge when all three colors change. And when you're trading the 5-in-1, you will hedge when the four colors of the subtrends change. And in this particular case, again, I drew this vertical blue line, and with the yellow arrows, I'm pointing to where all the four colors have changed to red, and they are opposite of the green color in the master trend. Okay, so that's when you hedge. Now you will then close a hedge trade when it's in profit, as opposed to taking a stop loss. If your hedge trade is not in a profit, you will, no worries, you will dollar cost average it. Now we handle all of these rules in our little cookbook, where we give you all the rules of the various strategies. All right. So now when the master trend changes, simply repeat the process, go in the other direction. That's it. Simple enough. Now, again, this is your rules book. You've got all the rules here in this manual. Don't worry if you don't remember. So now let's look at a specific example from an actual trading day that I had a couple of weeks ago. This is February 3rd. It was a Friday. And on a normal chart, the NASDAQ, and I trade NQ, which is the NASDAQ futures. I like those because you can hedge them easily, and I trade them as a CFD, which means that I have 200-to-1 leverage. I'm only using 0.5%, 0.5% margin to open a trade. So this particular market, NASDAQ futures, I can open one unit, which is roughly about $12,000 right now. I open it for $62, $63 or so. So pretty good deal, right? So I don't, if I trade real futures, I'd have to trade a whole lot, the entire lot, which is like 20 units, and the margin I need to post for that would be like roughly $18,000 or so. No, that is not a good deal, still a good deal, but 200-to-1 is much better than 10-to-1, right? Okay, so this is NASDAQ on a 15-minute time frame. Normally, and most people are looking at this and trying to figure out where to get into a trade, when to get out, and so on. Now, NASDAQ, generally speaking, for the most part, has a average daily range of 300 points, which is $300. And on this particular day, it hit a low of approximately 12,560. I rounded it off. and then hit a high of 12,860, which was the high for the day. So in between, it's 300 points. Doesn't mean that the market's going to go 300 points in one direction and nothing else will happen. Okay, in between, it will oscillate between those two highs and lows, right? It can actually end up at zero, gain nothing, but in between during the day, it will be moving. On the average, 300 points. Doesn't mean every day is going to move 300 points, but someday it will move 200, someday 400, but it will average out. So, and on this particular day, it did exactly that. Now, what you also see is that not just the actual range, but you see 5 distinct moves. Well, you see them in hindsight, you would have never seen them going forward, right? Going forward, you don't know. You see a red candle, you see a green candle. Do you know that after a green candle will go another green candle, or will it be a red candle? You can't trade this, right? I mean, you're guessing, gambling, but there's no real strategy that I can apply to this, right? I mean, using all those confusing indicators and everything else, yeah, maybe study, but 98% of the people lose money trading that way. So I don't want to go that road, right? But there are 5 distinct moves that you can identify. Okay, so here they are. First, the market started off here at 12,670. Moved down about 90 points to 12,580. Then it decided it wanted to go up about 180 points to 12,760. Then, for whatever reason, decided to go down 200 points. Then it turned around and ripped 300 points to the upside, and finally ended the day going down another 260 points. So when you add up all these points, right, all this movement, so within that 300 point range, the market moved 1,030 points, roughly, right? 1,030 points. Okay, so what can we do with that? I mean, this is in hindsight, right? You can see this on hindsight. Would you have been able to trade this off of a typical standard old-fashioned chart? Well, our chart 5-in-1 looks like this, right? And I mean, yeah, I took the picture of this chart after the fact to show you, but I was trading this as the market was developing, and this was my chart. So you see on my 5-in-1, you see the master trend, which is up here, the upper section of my chart, and then you see the sub trends, 1, 2, 3, 4, my 4 sub trends that are below, right? And on this chart, you also see the five breaks in the trend. First going down, then wants to go up, then turns around, goes down, then it goes up, and finally ends the day going down. So, which is basically same as here, except the chart is telling me to get into a trade. This is a good opportunity to trade. It gives me a clear signal, clear as day, clear as red, clear as green. I'm not colorblind. I can see it. If anyone's colorblind, just change it to black and white. Okay. So basically, we have the master trend up on top here, and the market is changing from red to green to red to green to red. All right. Kind of a crazy day, if you ask me, but okay, whatever. So now we've got these sub trends down here, and let's go trade. All right. So, and I actually identified my trades. I painted or put these purple arrows in for you so you could see where I took the actual trades. I identified about 30 different signals, but I didn't take all these signals. Took only nine of these signals because I was already in a trade. I didn't need to take another trade, or I wasn't necessarily at the computer. I don't trade 24 hours a day. But anyway, so I took these purple trades, and if I had missed them, there would have been other opportunities, as you can tell. So let's see what happened. How did I do? All right. So I took my first trade early in the day. It was a short trade because the market clearly was showing a downtrend, being red. I took a signal on one of the top sub trends, and I typically do not take trading signals off of the fastest uptrend or the slowest uptrend. I take my trading signals from these in between. Now I will close a trade from a signal from the subtrend, but I use the master trend and the slowest subtrend as almost like two master trends. So I don't necessarily take trading signals here or here, but I take them in the middle. It's just part of my strategy. I can explain that to you on one of the training calls, why I do it that way and how I do it. But okay, I said to say I took a short signal, and by the time my reversal signal came, unfortunately I wasn't in profit in this trade. In fact, I identified, all four subtrends being red, and that's where I actually drew this line. The one in here is my master trend is changing. I wasn't out of my short trend, so I had to hedge, and the hedge, I identified the hedge with this blue vertical line. So my first trade over here was short. Then I didn't get into profit, or maybe I was in the profit, but I wasn't at the computer. When the trend was changing, I decided to hedge long. So at this point, I had two trades, and the market changed to the upside. Well, I took my second trade, which was a long trade because the master trend was clearly green. I entered that trade, but unfortunately, the market reversed pretty quickly, and I didn't get any profit. In fact, all four trends have changed to red, which was a signal for me to do another hedge. So at this point, I had short trade, which I hedged with a long. Then I had another long, which I hedged with a short. And okay, we continue, see what happens. Now, soon after that, the market reversed again, and actually the hedge signal that I got earlier was a good one, because the market soon after that reversed on the master trend and started going down. So when I got my first signal on one of the subtrends, I went short again. That was my third trade. I went short over here, and I took my first profit just a little ways down the road, and that was about 28 points or so, $28 per lot, so per unit. So then the market reversed. I didn't get into any short trades because there was a lot of green on these subtrends. In fact, shortly after that, market reversed and went to the upside. Now, right after that, shortly after, I saw an opportunity or saw a signal, got into my very first trade on the long side. Then there was another trade, took a total of 4 trades in this green uptrend for a total of 67, 88, 51, and 30 points. Now, towards the end of this trend, which I didn't know it was coming to an end, but all 4 subtrends have turned red, which was a signal for me to get out of whatever longs I had. So what I did is I closed my very second trade that I opened. That was the long from over here from before, and then I also closed the long hedge, which was the hedge that I hedged my very first short. So I closed both of those right here on this vertical line, because market is telling me, hey, my chart is telling me it could be reversing, better get out. So I closed that, not a lot of profit, about 8 points between both of those trades, and then I sit and wait, see what happens. Sure enough, the market reversed, and I was able to take 2 more trades. They were both short. One was pretty good, about 65 points. The other one, it was kind of at the end of that move, made about 18 points. But also, we're getting to the end of the week, end of the day, and at that point, I decided to close everything out, which was I still had 2 short trades there. and that was one of the hedges, the hedge from my very second trade from early in the beginning of the day and the very last, and I got 15 points on those two combined. So together 11 trades, 9 trades that were my oil trades, 2 trades were hedge trades for a total of 370 points within the 300-point move of Nasdaq. And so basically that's an average of 33 points per trade. Now the question is, can you follow these charts, these colors? Because if you can, the other question is, can you make 1% per day following green and red colors on a chart? Okay, so I trade Nasdaq because Nasdaq doesn't really have a whole lot of volatility. Okay, now in order to make money, you need volatility, you need price movement, but volatility can also kill you, you know, like in Forex or some of those crazy markets where the market just rips away from you like crazy. So I like the markets where I know I can predict based on statistics that 80% of the time it's going to go up. I might be down for a little while, but hey, no big deal. I can always dollar cost average, you know, hedge, combine, create a trading sequence and close more than one trade at the same time, as you saw earlier on those hedge trades that I had. So, but where I make up for the lack of volatility in Nasdaq or S&P or even the Dow Jones index is my CFD leverage. Because with the CFD leverage, you know, I can leverage $600 into $120,000, right? And that makes up for the lack of volatility. So the index that has a tendency to trade in one direction 80% of the time gives me the certainty that I'm not gonna lose a lot when the market is volatile, because it really is not. Yet I make up on that lack of volatility with the leverage. You see what I'm saying, right? So when people say, well, you can't make those types of percentages, and I say, yes, you can, because I'm trading 200 to 1, right? So basically you have a $10,000 account. Can you make $100 on that $10,000 account? Because that's that 1%. Okay, can you make $100 on a $10,000 account in a market that moves $300 up and down? And if you have $10,000, you can actually trade 2 units, which means that out of the $300 and everything that happens in between, you have to make 50 points on that total price movement. That's it, right? That's your 1% a day. Now, you saw the charts. You saw how we trade. The question is, how do you want to trade, right? You want to use this type of charts or get confused over here with you know, trying to, in your mind, synchronize different indicators, 4 different screens and so on? Or does this seem a lot easier, right? With clear trading signals? That's the question. Now, can you make 1% per day following green and red colors on a chart? I guess at the end of the day, you make that decision and you decide that. Now we teach using these charts and using these systems, not one, several, depending on what type of trader you are, how to ultimately make 2 to 3% per day. Now, if you make 2% per day, that equals $970,000 from 10,000 in 1 year. Now, at that point, you can quit your daytime job. All right. So I'm running out of material for today, but there's just one more thing that I'd like to share with you, and those are my three keys to achieving your goals in trading. And the first key is know what your daily and weekly trading goals are, and have them in front of you at all times. I always have my goal. I always know I have to make $2,000. Okay, this is my goal. And I know I can break it down. I can get very granular. I know how many points I have to make, how many units I can trade to achieve that. I don't worry about, okay, I want to make $10 million this year. I don't worry about that. I worry about how much I'm going to make today. Because if I worry about those big goals, then I get out of my comfort zone, and those big goals seem today, they seem unattainable. I'm not going to make $10 million today trading a $10,000 account, but I can make $100. And once I've made $10,000, then I make $200. I can do, and most people can do that, right? So focus on your short-term daily goals, break it down to what you have to do today, follow the charts, right? And don't focus on millions of dollars, because when you focus on that, you make stupid mistakes, like you overtrade and make trades that you shouldn't be making. So stay focused, be patient, do not become greedy or overconfident, and do not overtrade. I cannot tell you how many times in my life I've become overconfident. Hey, this is not, I can do this all the time. And the next day, boom, I got whacked. All right. So just focus on your daily goals and you'll be fine. Now, stick to the plan, to the strategy. We can provide you the tools if you want. Now, you do this and you will become a genius trader. I promise you that. And with that, I've exhausted my material. I want to thank you for coming online with me today. I wish you all the best of success. Go to geniustradingsystems.com, reserve your own GTS package, and I will post the next webinar, next seminar. We'll let you know. Invite people if you'd like to. If you don't, it's fine. Next week, we'll be most likely getting Google on how to break down one of the strategies and how to get most out of your 3-in-1 and 5-in-1 setups. With that, all the best. Thanks for joining me. Good luck. Have a great week, everyone. See you later.